Hello, everyone. Welcome to this Energy Quick Chat where we rub minds with stakeholders and players in the energy markets. My guest today is Cindy Oraro. She's a partner at Oraro Company Advocates and specializes in energy, infrastructure, and projects. Cindy has 13 years of experience advising both local and international clients on renewable energy, oil and gas, corporate restructuring, M&As, and mining. It's great to have you here, Cindy.
Thank you. It's a pleasure to be here.
Now, we'll be talking about carbon capture and emissions trading in Africa. How countries like Kenya and South Africa and other key African economies are taking advantage of these to finance their climate needs. But first, let me ask, how is Oraro Group helping companies and businesses, governments to navigate the legal landscape for climate change policies in Africa?
Well, we've been privileged to be very active in the legal advisory space, as well as aiding governmental institutions in crafting and developing the regulatory frameworks that will govern energy transition, as well as carbon credit regulations. So in terms of legal advice and aiding clients in regulatory compliance, we first of all start with the due diligence process. That's something that we're very active in, where clients now want to know whether they are investing in businesses that are sustainability driven and that are compliant with sustainability regulation or ESG regulation. Another key factor is in the way we structure transactions and projects. Again, sustainability and green initiatives are key in terms of establishing ESG into project development. And then there's the aspect of just regulatory compliance. In Kenya and in other African countries, we see the development of these new regulations and legislative initiatives that require a complex roadmap towards compliance. Luckily, with the transition period, we are able to guide clients to navigate those complexities. In essence, we are involved across the value chain of transactions, as well as in the development of regulatory frameworks. And it's been an exciting journey.
Indeed. So give me a sense of what is delaying the adoption of carbon capture and storage in Africa, because I know that at the moment it's not very prevalent in Africa, but what's the delay about?
Well, to start off with, carbon capture facilities or technologies are very expensive. And the cost of establishing those projects in Africa does not, in many instances, have the same return on investment as, say, in the West. Another thing is that carbon capture and storage facilities are very controversial, simply because many of them require, significant amounts of land for the facility itself, as well as for the storage. And as you know, the storage requires constant monitoring to ensure that there are no leaks into the environment. And this monitoring can take years, costing, again, a lot of money. So there's a question of the rights of communities, particularly over community land. Do they stand to benefit from these carbon capture projects? I say that noting that land is a very emotive thing on the African continent. And that brings us to the last point on this, which is that, when you're dealing with carbon capture and storage projects, there's always a question of what is the alternative, and is the alternative better? It's argued in some instances that forestry projects have a better return on investment and are more effective at capturing greenhouse gases than, say, carbon capture technologies. That said, it's clear that these technologies play a crucial role in the climate change agenda. And particularly if you're dealing with, say, the manufacturing industry, they will forever, at least when we're talking about climate change initiatives and greenhouse gas reduction, they will be part of the conversation. So here in Kenya, we are seeing a lot of interest in these technologies, and with the amount of visibility and interest shown, we expect Kenya to become a hub in carbon capture and storage technologies and facilities.
Now, you were speaking about frameworks and how governments need to monitor these carbon capture procedures. But what frameworks should governments adopt in order to regulate the African voluntary carbon markets and create a suitable investment climate?
Fortunately, most African countries are members or signatories to the Paris Agreement of 2015, which creates the international framework or the international law framework for governing voluntary carbon markets. And in that, there are some countries like Ghana, Kenya, South Africa that have been very active in pushing the adoption of Article 6 frameworks. And Article 6 of the Paris Agreement, as we know, provides for the establishment of a voluntary carbon market and frameworks for intergovernmental and private party participation. So what has been lacking is the synchronization of regulatory frameworks to implement Article 6. Kenya took the lead last year with the Climate Change Amendment Act of 2023, which established for the first time carbon market regulation in the country. But there was a lost opportunity to synchronize its regulation of carbon markets with that of other African countries. So we expect that in the coming years, there will be an initiative towards synchronization and standardization of initiatives and regulation across the continent. That said, it has been widely agreed among several African countries that there needs to be comprehensive regulation of carbon markets, and that will facilitate investment across the continent in voluntary carbon markets here on the continent. So that's the starting point. And then thereafter, there are private initiatives like the African Carbon Market Initiative, for example, which seeks to make African carbon credits high quality and investment attractive, so to speak.
So sometimes it looks like it is an issue of a knowledge gap when it comes to these things, because it looks like not many people understand what carbon capture is all about. For instance, it took me a while to understand the fact that you are taking emissions from somewhere and putting it into some other places. The biggest emitters are still emitting. So at the end of the day, we're still having these things out there, but it's just that the permits would now limit, the amount of permits a company can get will be reduced when you know that you'll be paying so much more to get this permit. So that's a good one. So how could regional cooperation come into play and help to facilitate a continent-wide implementation of projects and shift towards a low carbon future?
So nowadays, when we're talking about regional and indeed continental cooperation, we look to the Africa Continental Free Trade Area Agreement. And remember, I mentioned that there is a lost opportunity for cross-border synchronization of regulation. Well, what that would do is to encourage cross-border projects in the carbon market space. And with the AFCFTA and the initiatives under that regulation standardization would it would be a plug-and-play situation, because there is a framework by which there can be cross-border projects and there can be cross-border buying and selling of carbon credits. That would really leverage on some of our natural resource here in Africa. A lot of our forests are cross-border, ranging across several countries. a lot of potential green projects could be cross-border and therefore would have the kind of scale that would give a good return on investment. So not just the AFCFTA, but there's also the question of the regional bodies that we have, like, for example, ECOWAS or the East Africa Community. We're not seeing a lot on, we're seeing a lot on the climate change agenda, but not specifically on carbon credits. And we're hoping that with time, these regional bodies would also embrace the carbon credit agenda, given that it's so lucrative. As I mentioned, we've only capitalized on 2% of the potential revenue that the continent could generate from the sale of carbon credits. That said, there are private regional initiatives. For example, the East Africa Carbon Markets and Climate Finance initiative, and it has a West African equivalent. I believe there's a Southern African equivalent. So these are established by private entities, but they rope in member states. And I think that is a good way to bring forward and capitalize on the establishment and development of carbon markets.
So basically, we need more even private sector financing as well.
Yes. Of course, there's a huge financing gap. It's said that in terms of the funding for adaptation and mitigation efforts to address climate change in Africa, we're only able to garner less than 10% of the finance that we need to address those challenges. And one of the innovative ways to address that funding gap is the development of carbon markets. But another way is for regional and continental cooperation to leverage our collective power to negotiate for better funding and to have a common approach in negotiating for access to such funding.
So what is your mid to long-term outlook for the carbon trading sector of the continent? And are there some countries that are starting to take that lead? We know that there is Ghana and there's South Africa and then there's Kenya. Do you see any other countries taking that lead and also following the trail like these other countries?
Yes. So Kenya is definitely one of the countries that has taken the lead in developing its carbon markets. Like I said, we are one of the first African countries to have a comprehensive regulatory framework governing carbon trading. But we're definitely not the only ones. South Africa has taken strides in this regard. It has a carbon tax. Ghana has been very active in terms of the implementation of Article 6. Egypt, the same. So, as well as many other African countries, we can see that the continent is really seizing the opportunity to grow its carbon markets and, not just gain revenue for itself, but also to have sustainable development. So, in the midterm, we are likely to see a lot more regional and continental cooperation. We are likely to see countries pushing for larger scale carbon market transactions and carbon market projects, and to leverage on instruments such as the AFCFTA. But we're also likely to see some controversial issues. As we know, these carbon market transactions and carbon projects, at least from a forestry perspective, require a lot of land. And already investors, in anticipation of the potential revenue that could be garnered, are acquiring, large tranches of land on the continent. That's been very emotive because of community land rights and community rights. That has prompted one of the issues, which is the benefit sharing with communities, to be addressed. That said, it remains an exciting industry to watch grow and develop. We feel that these are some of the issues, the rights of communities, and developing these projects sustainably are issues that can be addressed. And we hope that in the long term, they can be addressed to the satisfaction of all stakeholders.
Right. I was expecting you to get into the part where you speak about the benefits for communities, for these host communities as well. And then you mentioned something very crucial, which is getting out of the place from revenue to sustainable living, which is the goal at the end of the day. Great insights right there, Cindy Oraro, partner at Oraro and Company Advocates. Thank you so much for your time. And that's it on our Energy Quick Chat this week. Thank you everyone for watching. I hope you enjoyed that short video. And I am Justina Okechukwu. Bye for now.